Hey everyone, welcome back to Corporate Decoder, the place where we try and figure out if this company is brilliant or if they're just really good at sounding like they are. Today we're diving into a recent filing from Westwater Resources Incorporated, and it looks like things are taking a bit of a sharp turn. Let's get straight into it. Westwater Resources, or WWR as you might see it on the stock market, they filed a report about some pretty significant events. The big story here is that a doozy of a deal, a really important contract they had, just got called off. Remember back in July of 2024, Westwater's subsidiary Alabama Graphite Products, or AGP, signed a deal with FCA US LLC to supply them with graphite anode products. This was a big promise. FCA was set to buy these special graphite products, and it was a really material agreement, meaning it was a big deal for both companies. Well, fast forward to the 3rd of November, 2025, and FCA has sent a notice saying they are terminating that agreement effective immediately. This is a serious blow. It means that anticipated revenue stream is now gone. But here is where it gets interesting. Westwater Resources isn't just accepting this. They are saying they dispute FCA's right to just end the contract like that. They are clearly stating that they are keeping their options open and will be pursuing their rights related to this termination. This isn't just a simple breakup. It sounds like there might be a legal fight brewing over this. It is kind of like someone cancelling your order for a new custom-built car and you saying, no way, that deal is binding, and you can't just walk away from it. Now, on top of that major news about this terminated deal, the company also put out a press release on the 7th of November 2025, giving what they call a strategic update. This typically means they're trying to manage the narrative, especially after something as significant as a major contract termination. They're probably trying to reassure investors and explain their next steps. We don't have the full content of that press release itself in this filing, but it is being provided as an exhibit, which means it is important enough for them to highlight. The company is careful to say this information isn't really filed in the strictest legal sense for certain parts of the law, which is a common way to share important news without triggering some of the more stringent liabilities of a formal filing. And for those who like to see all the paperwork, they've listed out their exhibits. The main ones here are that press release we just talked about as Exhibit 99.1, and then there is the standard cover page interactive data file, which is really for the electronic tagging of all this information. No actual detailed financial tables are being presented right here in this specific item, but the implications of that terminated deal are huge and likely would show up in future financial statements. Signing off on this report is Stephen M. Cates, Senior Vice President Finance and Chief Financial Officer. His signature confirms the company is officially reporting these events. So what is the story here? Westwater Resources had a significant deal for their graphite products with FCA US LLC, and FCA has abruptly terminated it. This is a major setback, impacting their expected business and revenue, but Westwater isn't taking it lying down. They believe FCA had no right to terminate and are prepared to fight for their contractual rights. This also comes with a company-issued strategic update, likely an attempt to mitigate the damage and chart a new course. Looking at this, the immediate takeaway is a significant disruption to Westwater's business plans. The loss of a material definitive agreement is never good news. It raises questions about the demand for their specific graphite products, the terms of that original agreement, and essentially the viability or at least the projected success of that particular venture. The fact that Westwater is disputing the termination suggests they feel strongly about the contract's validity and the partner's obligation, which could lead to a costly and time-consuming legal battle. This is a pretty big risk to the company's immediate future and its ability to execute its strategy. The company's direction is now likely in flux. They will have to pivot and find new buyers for their graphite or reassess their production and sales strategy. The opportunity here, if they can successfully challenge the termination or find alternative buyers quickly, is to prove their resilience. However, the risk is that this could signal deeper issues with their product's market competitiveness or their ability to secure stable, long-term contracts. This whole situation puts a spotlight on their sales and business development execution. In conclusion, Westwater Resources is facing a significant challenge with the termination of a key agreement. While they are pushing back legally, the immediate impact of losing this buyer is a clear negative. Investors will be watching closely to see how they navigate this dispute and what their strategic update truly entails for future growth. Alright, that is our quick dive into Westwater Resources' latest filing. What is your take on this major contract termination and the company's response? Do you think they will win their dispute with FCA? Drop your thoughts in the comments below. If you found this breakdown helpful, please hit that like button and subscribe for more corporate insights. And don't forget to join our Discord community linked in the description for more in-depth discussions. Thanks for watching. See you next time.